I started trading crude oil commodities from the year 2011. Like every beginner, lost a lot of money. So I started more as an intraday trader, trading crude. But now I'm more of a swing trader, and I also do equity research in depth.
Because most of the people will come with like a investment and capital market. Then we'll go for like a derivatives and commodities.
So all of this data, when I look at it from a very investor point of view, what I'm looking at is, okay, I understand that energy prices are going to increase.
Yes.
Which means flights will become expensive, and trading is very personal.
Obviously, yes. Hi all, welcome to Alice Blue, another podcast session. Today we have a special guest, Mr. Devduth with us. He's already having experience in the capital market more than 60 years. So today we are going to cover some good subject. So welcome Mr. Devduth to Alice Blue session, please. Yeah.
Thank you so much, Mr. Anil. Absolutely excited to be a part of this amazing podcast, and love the ambience over here.
So, Devduth, can you please have a brief now about your capital market journey? How was your background then we can know more?
Absolutely. So it has been an amazing, tough, but a very enriching journey for me. Started learning about investments when I was in my second PU. Got exposure through my aunt who was investing. And if you remember back in those days, people used to do telephonic calls to brokers. So that is where I started learning about investments. And then I started trading crude oil commodities from the year 2011. Like every beginner, lost a lot of money for the first 3-4 years. And then back then, there was not a lot of exposure to the internet, and you had all these classes, seminars. So I attended a lot of programs, met a lot of exciting and experienced traders, and learned from them. And gradually started building my own setups. So I started more as an intraday trader, trading crude, but now I'm more of a swing trader, and I also do equity research in depth.
Got it. Okay, so it's good to hear that you started with a commodity, because most of the people will come with like a investment and capital market. Then we'll go for like a derivatives and commodity. But you started with like a good in commodity like crude. So it's good to hear that. Okay, so I think we know it's like a tough competition. We know, for example, now volatility, wealth. So can we have a discussion with you how the smart traders will win in this uncertain market?
This is a very, very interesting and a very important topic, especially if you look at the Indian market. The index has not made any money in almost 24 months. Right, the market has been consolidating. And except for a very few skilled intraday traders, not many are making money. So it is important to understand how this war is impacting the global geopolitics, first thing. And along with that, we as Indians, how does it impact our economy in the macro as well as in the micro? And then I think third, most importantly, along with the macros and micros, how is it important? How is it more importantly impacting traders like us? That is, I'm sure everyone wants to hear from us.
Yes, obviously, yeah. Because recently we only seeing like a bullish market. For example, the newcomers only see it like a bullish. Now they started like a randomly market is falling every day now. So can you please input your valuable points how we can take it look in the like a global market versus Indian market?
So I think what separates good traders from people who are losing money in the market is the noise. So if we look at it historically, right? If we look at history, right from the 1800s or early 1900s, when we had the First World War in the early 1920s, and then we had the Great Depression in the 1929 in the US. Later on in the 1940s, we had the Third World War, where every time there was a war, markets crashed.
Yes.
And if you look at the 80s, 90s, the Gulf War, 2002, Iraq, 2008, the subprime crisis, or 2019, more recently, COVID.
Yeah.
What has happened is, from an investor point of view, whenever the markets have tumbled, retailers, an average retailer psychology is they tend to exit. They get scared, and in an emotion of fear, they exit.
Yes.
We all know that traders generally work either from fear or greed.
Yes. Yes.
So they tend to exit early. But as an investor, if you have a structure in place and if you look at the data, every time the market has fallen due to a war or due to a crisis, in every 3 to 6 months, the market rises again.
Yeah.
So for investors, that is a great thing.
Yes.
From a trading point of view, if you're a trader, you will stick to your framework. You will not care what is happening outside. You will take the data in structurally what is happening globally and what are the elements that will that you can benefit from, and you can use that to devise your own trading strategy.
Got it. And coming to so this time we have two things. For example, whether should I invest or should I trade? So that question will come. So what is your suggestion?
It's a very interesting question, Mr. Anil, and I'm sure most of your viewers want to listen to the answer for this question. What is happening is in the market right now, there are different kinds of sentiments, right? If you're a trader, you need to understand what kind of a trader you are,
yes,
right? And what kind of structure you have built for yourself. Are you a scalper? Are you an intraday trader who quickly trades within 10-15 minutes? Are you a BTST trader? Are you doing swing trading?
Okay.
Or are you a positional trader? Or in the long run, you're an investor? So first, you need to understand your psychology, because your psychology and your expectation will define what the market is willing to give back to you.
Yes.
Right? So for example, if I'm an intraday trader and if I'm trading in a very small time frame of 5 to 10 minutes, what will happen geopolitically will not impact me. I'm just looking at that 2-minute candle or 1-minute candle, and I'm obviously looking at what is happening globally. Based on that, let's say, for example, if I'm trading crude, right, or if I'm trading equities. So for me, if crude is rising, equity is going to be it is going to be a contraindication for equity. So if I'm bullish on crude, then fundamentally I have to be slightly bearish on equity during a war. So it depends on the psychology of the trader. Trader needs to understand first what is it that he wants to work on, and then eventually build on it.
Got it, Mr. Devduth. So can you suggest me what are the data or what are the things the trader or like investor, because we know we sleeping only the market working. For example, we don't know what happening tomorrow, but at least how data, how some good things can you please suggest? Na?
Yeah, great. That is a very important question, I feel, because when it comes to data, it is important to understand your trading background and how you can utilize the data. So whether you're an investor or a trader, you will look at data differently. For example, if you're looking at fundamental, like if you're an investor who is planning to invest for 10, 15, 20 years, or at least for the next 3 to 5 years, and you're trying to invest in the equity space, you will look at geopolitics and the macroeconomics. First thing, what is happening globally. And the second thing is you will look at what is happening, how is it impacting your country.
Got it.
So because we are discussing about war right now, war is a very crucial topic. What is happening globally is it is resetting the power game. Right? From soft power now we have US, Iran, Iraq landing hard blows at each other. So what is happening is because of the unrest that is happening, there is obviously a natural impact on energy. And when we speak about energy, it is impacting crude directly. And as we all know, when there is a war, the demand and supply equation of crude gets impacted. Crude prices rise due to shortfall of demand. And recently, there's also data that the ships are charging for a safe exit from the Strait of Hormuz. They're charging between 2 to 5 million for a safe passage.
Got it.
The insurance premiums for these ships have increased. So naturally, when there's an input cost, the actual input cost has increased for anyone who's probably buying fertilizers or who's buying oil. Strait of Hormuz probably has more than 20% of natural gas is supplied through Strait of 25% of the global natural gas is supplied through Strait of Hormuz. 13% of fertilizers. So all of this data, when I look at it from a very investor point of view, what I'm looking at is, okay, I understand that energy prices are going to increase,
Yes.
which means flights will become expensive. So as an investor, I will not invest in travels or I will not invest in airlines.
Okay.
But on the other side, where can I invest? Pharma is something which is called a safe haven. No matter what is happening globally, people will not stop consuming medicines.
Yes.
Right. And then FMCG, fast moving consumer goods, people will not stop consuming food or their basic necessities. Also, another thing is something like gold, right? Every country is very heavily invested in gold. So that is from an investor point of view. From a trader point of view, let's say if I want to trade crude or if I want to trade gold, I will look at the geopolitics, I will look at the macro.
Okay.
And then in the short term, I will look at what data is available. Is there any recent news that is coming in? For example, crude inventory affects every week. So those are the fundamental data I will look at. And then in the technical, based on my psychology and my setup, like for example, when I trade crude, I follow something called very simple demand and supply zones.
Okay.
And there is something called smart money concept.
Okay.
So basis my setup, if the data tells me on my chart that crude has come to a very important demand zone, and you should be waiting for a trigger based on your setup. So yeah, data is very important, whether it is fundamental or technical, and how we use that data to implement it as a trader is very important.
Yeah, got it there. It's also like a valuable inputs. Okay, now we are seeing daily like a marketer, for example, Iran telling something, like Israel saying something, and US say telling. So the current scenario, what I can tell, like a war to wealth. For example, war to wealth. What will be your current strategy? For example, you can suggest, or what will be you will fold. For example, war to wealth. Can you please?
Okay. So again, two aspects to it: fundamental and fundamental for the medium to long term,
okay,
and slightly more technical for the short term view. So let's say if I want to invest in the equity markets,
okay,
right? So we at RupeeVyze, we are into financial consultancy.
Okay.
And what we do is we provide detailed insights, data-backed insights, because we are talking about data and AI. So what we do is we look at data to understand what is happening globally, geopolitically, and how will it impact your current status. So basis that, and also individually, right? Individually, what am I doing, right? Because personal finances and trading is very personal.
Obviously, yes. Yeah.
Right. So basically, how much am I earning, and what is my risk appetite, and what is the capital that I wish to deploy? So basically, if you're trying to invest in the current war crisis, right, you have to look at the factors that are in favor of the Indian economy.
Okay.
So because of the oil, obviously, there's a lot of pressure on India in terms of the consumption that is happening. The prices are going to eventually increase. A lot of the sectors are going to get impacted fundamentally. Yes. So I need to understand from the data, what are the sectors that are going to benefit from this war?
Okay.
Right. So the first important thing is oil and energy. Anything that is got to do with oil and energy, right? Any company that is Oil India, for that matter. Not the oil marketing companies, but the companies that are into sourcing oil.
Okay.
Right. Who are working on what do you call the for better lack of words, oil, they kind of rebrand everything and they're eventually supplying it to the market. And then you have Indian Oil and everything. That is marketing. So for any company like Oil India, it is going to be very beneficial, because if the prices of crudes are increasing, they obviously have a positive impact on their margin. For an oil marketing company like Indian Oil, it might be slightly dicey. If we have seen recently, ever since the war has started, Indian Oil, Bharat Petroleum, all these stocks have slightly fallen.
Yes.
Because when they're marketing, their margins also get into pressure.
Yeah.
And also, I need to look at data like, will gold be, a safe bet? Are globally countries investing more in gold? And if crude is impacting the equities, what are the segments? What are the safe segments? So like we discussed, pharma is one safe bet. Historically, every time Nifty has fallen, pharma has come to save the index. So as a investor, I will invest more in pharma. If I'm a swing trader, if my view is 10 to 15 days or 5 days, I will look for obviously the technical aspects of a chart, whether it is forming a decent base and does it form a breakout and a decent retest, right? Whatever technical indicators I'm following, basis that I will decide if it is good enough to trade in the short term. So whether I'm an investor, if I'm an investor, I will look at position allocation, right? If I'm heavyweight on something like IT, right? We advise our clients to reduce their allocation in IT from the last 1.5, 2 years because of the threat we've had from AI. Similarly, our allocation to oil, our allocation to energy sector, our allocation to anything that does not directly impact a war crisis has been more, right? The allocation slightly to silver, gold, and the metals has been very on the positive side. So that is from an investor's perspective. From a trader's perspective, I'm looking at what are the instruments that I can trade. Right, from a geopolitical perspective, like I said, crude is going to be my favorite. And you have a lot of experience in commodity markets. So I'm sure you realize how important crude and gold, silver are during a crisis like this. Right. So either people during a war, because of the supply shortage, the demand of crude is increasing. So if I have a slightly mid to long term view, which we have traded recently, there was one huge spike from close to 6,500, 7,000 to up to almost 11,500 MCX crude had risen. And although gold has not performed relatively well, it has been almost down by 15%, but still in a fundamental structural way, I think next 6 to 12 months, I feel data wise, it is in a very positive space. Silver is one of the most volatile. So I'll advise newbies and people who are not very good at trading to stay away from silver trading unless they have a lot of experience. So strategy depends on the overall output that you see from the geopolitics. And along with that, once you streamline everything, your position sizing, your risk management, your trading style, at what time do you decide to take a stop loss, your entry exit criteria, all of this has to be worked in detail.
Yes. So coming to the action, so we are hearing daily one news, another news. So can we have a have a look what's happening globally?
So all of us, we are eagerly waiting when this war is going to end. Mr. Trump, he comes in front of the media and he makes a statement that we are going to have a ceasefire for a couple of weeks. And then all of a sudden there's a new news again that Iran has negated everything. They're not agreeing to the terms and conditions and the war is going to continue. So it is a lot of unrest and a lot of panic that is happening in the market. But like Mr. Warren Buffett puts it in his own words, he says that, be greedy when everyone is fearful and be fearful when everyone is greedy. So I think from an investor or a trader's perspective, it is very important to analyze what is happening globally. There is a geopolitical shift. You have US, which has been at the helm of things. They have been dominating the globe, right? In the 90s, the Gulf War. Earlier than that, you had a fight with USSR. And the all that is happening globally is in the fight for being in the limelight, for making sure that they are in control, right? Making sure that they remain the number one economy globally, right? So I don't want to sound very political or I don't want to get on the wrong side of things. But there is a lot of geopolitical unrest, and how this impacts is when you have US that is constantly bombing countries, whether it is for their own benefit when it comes to oil. Or any other energy. In the name of nuclear, they are bombing Iran right now, right? So all of this is impacting global trade. First thing, right? Strait of Hormuz is a very very important trade location, and US understands that. And more importantly, in a very nearby location, 90% of Iran's oil that the export is produced.
Yes.
Right. So now US understands that if they get hold of this location, they can control. If they're able to control this, they're able to control global trade.
Got it.
While on the other hand, you have countries like China. China is basically benefiting from this war.
Yes.
Right. They are getting energy. They're getting crude at a discount.
Yeah.
Both China, Japan, and India, all of us, we heavily rely on energy, right? So China has close to 80 days of oil reserves, energy reserves.
Okay.
Japan also has something similar. India had somewhere around 30 to 35 now. As per data, we have reached somewhere around 72 days.
Okay.
So now what happens is US is, because of this war crisis, they're digging into their reserves.
Yeah.
Right. So they're digging into their reserves. And what it is doing is it is eventually sending panic across the globe. They have very reduced reserves available now. Now, how this impacts the economy is, first thing, because of the energy crisis, it impacts inflation, because the cost of living, cost of goods and services produced, the cost of transportation, everything increases. Second thing is, eventually it kind of puts pressure on the Central European banks or the Federal Bank. In a normal situation, they would try to reduce the interest rates.
Yes.
But because of the crisis and because of the inflation and because of the higher cost of goods and services, they cannot reduce the inflation. Now, globally, it impacts different markets in a very different way.
Yeah.
For India, which is a very high energy importing country, we rely heavily on importing oil.
Yes.
And we live in Bangalore, which has the highest four-wheeler density in the world, right? So the amount of fuel consumption and the amount of energy consumption that we do is kind of humongous. So all of this is putting a lot of impact. I read a statistic which says that for every $10 increase in price of crude,
okay,
there is a $15 billion current account deficit that impacts on India.
Okay.
So imagine crude had gone all the way to $115,
Yeah.
and it is trading between 80 to 90.
Yeah.
And the analysts are saying that it is going to reach anywhere between 80 to, somewhere around 150, it is going to stabilize. So you're seeing another 40-60% rise in crude.
Yes.
And this will definitely, imagine $60-70 increase in crude, the kind of current account deficit, the impact it is going to have on our economy. So it kind of leads to a dominoes effect, if you call it, and it is going to impact all the economies globally. So we all are waiting and watching very carefully. And as analysts and as advisors, all we can do is, manage our position sizing, advise our clients not to panic.
Okay.
Look at it from a data perspective. If you're a long-term investor, there's nothing to worry. Do your occasional lump sums and keep doing your SIP or your investments. If you're a trader, identify setups that will help you, stay afloat in the market.
Got it. Fine. So coming to another point, now we are seeing a lot of plus and minus, for example, bullish, bearish in the capital market. So what is your opinion in the current market? What are the trading opportunities in the commodity markets?
There are excellent trading opportunities in the commodity market. You've been in the commodity space for more than 15 years. So you know very well how the dynamics of the commodity market has changed. Earlier, in the early 2010s, when we were trading, there was not much liquidity, whether it was we didn't have crude options back then. The lot sizes have obviously changed a lot. But now, because of these mini lots as well as options, even a average small retailer who comes with a very small capital, if he comes with a plan to trade, he can make a decent amount of money from the market. So I feel the most important thing a trader should look at while trading commodity is obviously understand what instrument he wants to trade. Instead of trading multiple instruments, understand what are your key areas of strength. For example, if you're trading crude and if you're trading gold, does your psychology align with these two instruments? Okay. Or are you trading natural gas? Or you want to trade aluminum? Try to understand a little bit of the fundamental, how these instruments are impacted. What is the demand and supply? Because any commodity is essentially driven by global demand and supply. For example, when we talk about crude, it is either impacted by a W2I and the Brent crude. That's the overall supply that is there in crude. And similarly, gold is also impacted by a few fundamental reasons. So I need to understand, I need to have a very structured framework in place. So when you're doing trades in commodities, you have to come with a very structured and a very proper layout, proper blueprint for trading, right? So whatever you're trading, first you need to understand what is the instrument that I am comfortable trading with. Does the volatility of this instrument align with my risk appetite? Or do I get a heart attack, or do I have my heart in my mouth when you go to sleep and next morning you see your account has blown out, right? So how do you manage the risk? Because there is a lot of overnight risk, but the reward is also humongous, right? Recently, I saw one trader who was very active on Twitter. From a capital of close to 5 crores, he has made somewhere around 3.5 crores in a couple of months. And then you also have people who are blowing out accounts, right? So crude, gold, or commodity, any commodity for that matter, is not bad. How you trade that instrument, what kind of plan or what kind of approach you have. So if you ask me, my approach personally when I trade crude and gold, because I'm an analyst and I look at geopolitics, and then I generally take swing positions in commodities. I'm looking at the fundamental factors, right? Contra indicators. If the equity is falling during a war, how is it impacting crude? And also I'm looking at some of my technical indicators. So once, let's say, crude is coming to a level where it is giving me a trigger technically, along with that I'm looking at key news and information globally that is going to trigger crude. Right? For example, we spoke in detail about war. Strait of Hormuz, it was given that because of the issue that is happening in the war and because of the bombing and the missiles that were being deployed, energy and crude demand would increase. So now I have a fundamental reason. Now it has also given me a technical indication. The third thing is I need to see what capital do I want to deploy, right? What kind of capital am I comfortable with? For example, if I have a capital of 1 lakh rupees or 10 lakh rupees, what portion of the capital do I want to risk? Right? And what is my reward? Let's say if I've deployed 1 lakh rupees in a trade, and I'm expecting somewhere around 10 or 15% returns. What is my risk? Am I risking 2%, 3%, or 5%? So the risk reward factor becomes a very important thing in trading. So irrespective of the commodity that you're trading, basis your psychology, you decide which commodity you enjoy trading basis your psychology. If you're someone who doesn't enjoy the volatility, I would suggest you stick to intraday. Because overnight positions can be very risky if you cannot track day-to-day positions. If you're someone who's at peace, who knows that, maybe I can have a immediate impact next day. For example, disclosure, I have a decent allocation to crude now, expecting. So I have my stop losses in place and expecting a kind of slight reversal. So last couple of days, I have a position in crude and we have seen decent move in crude so far. So how do I manage my position? After my entry, if it has moved a certain percent, am I trailing my stop loss? Am I reducing my risk? And how am I managing this position? So in like the psychology, position sizing, risk management, it is very crucial for trading. And when it comes to commodity, who better than you to understand how important it is in commodity trading?
Yes, thank you. So anyway, it was a wonderful session with you, Mr. Devduth. Thank you for joining with us. So we'll explore obviously in the coming days with you more other good topics. Once again, thank you, Mr. Devduth, for joining with us today. Thank you.
Absolutely, Mr. Anil. It was a wonderful experience meeting a veteran like you who has been in the markets, driving the vision of Alice Blue. And kudos to the digital team here for such an amazing setup. and excited to see how the market operates. And my closing sentence would be, what happens from the market, right? Market is always futuristic.
Basically.
So no matter what happens, market, will continue to rise in the long run, right? So more than the geopolitical tension or more than the short-term panic, market is concerned about the outcome. So if you're able to analyze and understand the outcome, you can use it for your fundamental and technical trading.
Yes.
Thank you so much for giving me this opportunity.
Thank you once again.
Thank you.
Thanks.
Investments in securities markets are subject to market risks. Read all the related documents carefully before investing.